Welcome traders to another educational video titled The Morning Star. The Morning Star is a very popular reversal pattern among traders. It consists of three Japanese candlesticks. The first candlestick is a long white body in the direction of the prevailing trend, in our case, in a downtrend. The second body is a small body. It has a small real body that gaps below the previous candle. When we say gap, we mean that the real bodies of the two candlesticks do not touch. Good. The color of the second body, of the small body, is not important. It might be either black or white. Now, the third candlestick, it's a long candlestick. It's a long white candlestick that closes well into the first candle's body, and ideally it closes above the midpoint of the real body of the black candle. Now, the implication of this reversal pattern is of course bullish. Now, let's identify our morning star on a real price chart, and of course, I'm sure you guessed it right, it looks like that. Let's move on, and before we do that, just notice that there is an overlap between the second and the third bodies. And this happens because in CFDs, in a continuous market such as the foreign exchange, that is possible because it's a continuous market. Now, let's take a look at a very simple strategy. Again, we can identify the morning star right here. Again, the first prerequisite is met. The two first bodies do not touch, and it's identified at the end of the decline. And of course, we can go ahead and place a buy order right above the pattern, right above the high price of the pattern. I will show you different versions of that. And then we can always place a stop loss, a protective stop loss, right below the low price of the pattern, just in case you don't know what is going to happen next. Take profit strategy is pretty straightforward. We're going to take all our profit at the resistance, but in any case, when we encounter any reversal pattern in the opposite direction, we're going to close the whole position. Good, let's modify this and add some more parameters in our simple strategy, like we always do, of course, right? Again, at the end of the decline, we identify the morning star, and it's pretty obvious. A long black body at the end of the decline, confirming the direction of the market, and it is followed by a small body. The color is not important, in this case, it's a small black body, and of course, it's followed by a long white candlestick, not that long in our case, but it seems that it closes right above the midpoint of the black body, right? Excellent. Take profit strategy, but before we do that, buy order at the high price of the pattern, right above the high price of the pattern, and a protected stop loss right below the low price of the pattern. Take profit strategy, again, a very simple strategy. We close part of our profit at the 200% level, and then we can close the remaining at the 300% level. But in any case, when we identify any reversal in the opposite direction, it's a good idea to close the remaining of our trade. Let's go ahead and modify or introduce a different parameter in our strategy. In this strategy, we're going to identify the morning star at the end of a decline near the lower Bollinger Band. Now we introduce a new indicator in our strategy, the Bollinger Bands, very popular among traders, and we're going to look for a morning star in the low area near the lower band. Excellent. After we identify it, we place a buy order not above the high price of the pattern, but in this case, right above the high price of the third candlestick. Sometimes it might be higher than the first candlestick, and sometimes it might be lower. The advantage of placing a buy order right above a smaller third candle is that the risk is smaller. And this is a big advantage. Of course, it has to do with how aggressive or conservative trader you are. All right, if you are an aggressive trader, then most probably you will wait for the high price of the pattern before you enter the market. And of course, if you are more aggressive, you might enter right, in this case, right above this smaller white body. Protective stop loss is always a good idea, just in case you never know what's going to happen next. And of course, we are going to take all our profit when prices reach the upper Bollinger Band, right? Or whenever there is any reversal in the opposite direction. I'm sure you understand that. Good. Let's take a look at this last strategy. Once again, using the Bollinger Bands, we identify the morning star near the lower band, and we take a buy order right above the high price of the third candle. In this case is the high price of the pattern. It coincides, right? And a protective stop loss right below the low price of the pattern. And take profit strategy is going to be once again the upper Bollinger Bands, or if we see any black body closing below the upper band, right, within the bands. So it's a good signal that we might close the entire position, the whole trade. Of course, any reversal in the opposite direction, it's a good excuse to exit the market. So once again, we take profit when prices touch the upper band, or any reversal in the opposite direction, or a close of a black body in the bands. All right, very good, guys. I hope you enjoyed it, and don't forget to subscribe below, like, and I'll see you in a while with another educational video.